So good afternoon. We are going to do a quick update, but this afternoon I'm starting with DXY. These are times you must be careful trading any dollar pairs. You have to be very careful this month. A whole lot is happening at the moment, and trade and price, they're actually in the middle, and we are going to look at our sentiments, and I'll tell you what I'm inclined to do, what I think price is more inclined to do. This is monthly time frame, and we are quite sure of what has transpired here on the DSY. On the Euro USD is going to be an inverse of the structure that we are looking at here. This is like an impulse here and a correction of 1 and 2. And of course, we have a 3 from here up here. Then we have a 4. The 3 ended here for sure. The 4 of 3, which is like an A, B, and a C, and to finish the 5 of a 3. And so the 5 of a 3 finished here, and the big 4, we said it looks like this is A, B, and a C of the big 4, and this may have just ended the 5, and rightfully so, because if you look at it, it may have just ended 5. That is more corrective in a way, although it ran in 5 waves. And the 4 that we just noticed here, because since 2008, the DXY has been bullish, so dollar has been bullish since 2008. But now, what we are noticing here, for me, may just mark the beginning of a shift of the trend. So what is coming down here could be a corrective format for this. It could be a big ABC, or that we are running an impulse, that this might just be a wave 1, and what we see here might be a wave 2, and we have a wave 3, which probably will break the height, the low here on the DXY. So anything is possible. Looking at this, anything is possible. Looking at this, this is 4, and this may just be end of 5 for us. So now, let me come again. I said this move here looks quite impulsive. So we expect, okay, it could be an ABC correction and more upside from the dollar, but with what we are seeing, it doesn't look like that. We are having, we are doubting in our mind that what is happening here, it doesn't look like that, that we are going to have an A, a B, and a C correction before we have more trust to the upside from the dollar. But if you look at the kind of correction here, does not look like a proper A, B situation, because it didn't even get to the extent of B. At least a B should give at least 50% of the retracement, which we didn't get to. It barely touched 40% before begin to see a drop in the dollar again, which is what we saw for the whole of last month. So it was just February that we saw that upsurge of the dollar, but now it's looked to be falling, again. So there are different scenarios, but on the long run, what we have to do is to interpret the immediate structure that we are seeing. And so this structure is actually in the middle. That's what I'm saying. This structure is in the middle. In terms of the strength of dollar against other US pairs, so we are seeing that temporarily dollar is falling and is losing strength. Now, in my previous videos that I did, we were looking at a possibility of this and a B, which didn't get to the limit of a B, and to see a C that will not break this low, and that the dollar will turn up. But what we are seeing here is giving us an early concern that instead of we doing a B, this may just be a wave 1 and a wave 2. We're going to do a wave 3, a wave 4, and a wave 5 to finish 1 in the big cycle before we see a 2 and to run a 3. That is what it's looking like, but it's too early. It's too early because this may just be the end of a trend and we are starting a new trend or a new cycle altogether. But then we are going to take what is happening here. So the Yoruba will say, Atibi, what do they say that? What do they call it now? Don't let me say rubbish. The man case, and we are going to look at what is playing out here, and I'm going to let us see. So that's the monthly. Monthly, it looks as if it's a reversing, a total reversing, a change of a trend so far. But then it's still in the middle. Anything can happen because price may still fall before bouncing back. But if I tell you everything looks in favor of price falling further. So let's go inside of a weekly to see. I don't want to waste much time. I just want to use DXY for us. Now, this is what we are seeing from the dollar. So it has been bullish, but this is where we saw a move to the downside, and it could be the beginning of a new change of a trend. That is what we are saying, because we had expected that this, which ran in 5 waves, rightfully so, it ran in 5 waves, which is quite impulsive. I can't really say this is like a triangle, no. It's more of like 1 and a 2 and a 3, here, and a 4 and a 5 before this move. Now, this correction, we expected that if it's going to be an ABC, if this is A in the bigger cycle, this should also be an A in a smaller cycle, a B in a smaller cycle, a C in that smaller cycle to get to that correction of fib level of 50 or 61.8 before we now do a B in the bigger cycle. So this would have, the correction in between here would have just given us a B in a smaller cycle, which probably would have just gone to like 50 or 61.8 of this old move. And then we now see probably an equal length to the downside before we turn up. That was what the way we were engaging. But the way the sellers had recovered here, it's making us doubt the intention of the dollar. This dollar is going through a rough time. That's the early signs that we are getting, that the dollar is going through a rough time, and dollar is not even able to, pull up at least to recover before, losing it again. And that is what is giving us a worry. So there is on the weekly time frame, these are taking of this supposedly a move of this B correction. If it is the whole of this is A and this is the whole of B, so supposedly the A move and of that B correction, but the B correction of that bigger B, it looks as if it has recovered about a bit over 76.4. And that is where the challenge is. It's recovered a bit over. So, and if we had seen a price action at about 50 or 61.8, then we probably would have run equal leg to the downside to get to that, correction that we expect, and turn to give us a B. So anyhow, either we do a C of B to turn down, or that we are going straight to break this top, they all still favor that the dollar is losing strength. So anyhow, for now, dollar is still weak, is losing strength. But our sentiment is that, are we going to still see a C? Is the dollar going to still gain a little strength to give us a C before losing again? or that is going to break ultimately. And let's see the daily and how to really progress with this. So looking at the daily now, going to the daily now, we saw that we finished this move again. That's a move that we saw, which is the big A to the downside. And now we're supposed to see a B. And this is supposed to be A of a B. And we thought this one would be a B of a B. Before we see a equal leg of a C, and we should complete the B correction of this O move, then for us to see a C. But then these have gotten to, it has pushed beyond what we regard as the limit of the correction, and except something happens. So this move for me to the downside, I won't still, well, it's possible, but then structure would have to be taken before I can say that, oh, we can still see that this as A or a B and a C. Structure would have to be taken. Without that, what I would say, we are just going to have some correction to the downside, and we're going to break the top or break the bottom. That is the way we should align ourselves until structure is taken. Until structure is taken to the downside, we should not think that, oh, this may have just finished the old correction, and in that case, this may just be a 2 to this. But looking at it, does it look like a 2? It doesn't also look at like a 2, because this is just like, it's too bullish or it's too bearish. You know, the move against the dollar is too bearish. It didn't even press close to 650 or 61.8. You know, at 50 or 61.8, it could still be an ABC, or it could still be a 1-2 situation. It's not even looking like that. It's not looking like that. So this movement to the downside is too shallow. So we're going to trade and trade and trade with care, because anything can happen here. Anything can happen here. We're going to trade with caution. Now, what caution? What caution, if you ask me, what caution? Because I still don't want to believe that this, even if this one is not A and it's 1, the 2 here is shallow. That's number 1. Then again, even if it is not a 1-2 situation and is A and a B, the B also is shallow. It's shallow. Now, with this move here, this had recovered a bit over 76 to the downside of this entire move. So I would need structure to be broken to the downside for me to signify that, okay, we are probably going down. So we are going to see, because you will need to draw a trend line from here to here to see, that means a trend, a support, to see if structure is going to be breaking. So what are the structures that you are expecting that will be taken, that immediate structure that will be taken? You know, like this is a structure, and this is a structure here. This structure was broken at this top to form a new structure. And another structure here, after retracement, this one also was broken here at this level. Now, until we begin to see the descent here. So when you are talking of structure, you are going to look at structure. Which structure are we talking about again? Because before you can say price is going to go up again, this is the immediate structure that will have to be broken at this top here. You have to break this structure. In fact, this is the immediate structure here at this level. This is one structure that you have to take out on the daily. Then the next one will be this one on the daily. Then the next one will be this particular resistance or support here that would have to be taken again. And as when you are taking more structure like that and you are breaking them, then it's telling you that probably you are going to do a C before you do a B. So in case you see that this is big A, and this is, the whole of this is B, and is a small A, a small B, and a small C. But again, it doesn't really matter, because this one can still be a 1 and a 2 situation, or A, B, C situation, whereby you trust your A of it to the downside, and that the B, who says that the B cannot still come up. The only thing is that this can come up and break the top and make this B to break the top and give you a situation of an extension beyond this A move. And the extension can be, it can be a retracement of 0.9, which will now still give you a format of what? A format of a regular flat, which will push this one on the daily to the downside. I hope you are getting what I'm trying to say. Which will put this one to the downside. I will explain better on Euro USD. Oh God. Okay, let me see if I can still do that. What I'm saying is that I'm looking at a situation whereby anything is still possible. This one can still come up here. If I want to use, which color do I use for it for you to see? Let me use purple for it. So this one can still be the A that we're talking about, but that it didn't correct, and this one has broken more than, by the time I'm going through Euro USD, you will understand, and it's going to be faster. So let's see how deep the correction was of that. These are given, this is 76 here. It broke 76 just by a fringe, close to like 77 or 78 here. 76 is on this blue, so which it broke. Do you understand? So this one can still be a B. If this one is a B and the price is going to go all the way to break, then it gives a zigzag. It can still give a zigzag at this level. So which means that if it's going to give a zigzag, then if it's going to give a zigzag, then this one can come down here and say it's going to be a zigzag. Even if it's at 90, because 90 is at this level of the red here, I mean, the price got to this point, then this is still going to be a regular flat on the daily to still go down one more time and take structure out and go down. In that case, once we're at, get to that point. So we need this daily correction to figure out where we are going, because the B leg is usually, everybody wants to be careful trading a B leg, which this one so far looks like a B leg. You have to be very careful trading it. Not until it's done and we begin to break structure again. So we need to be careful trading it and want to be careful. So you have to be taking piecemeal what is happening inside of this trade itself. So because price may actually now begin to go up again, because it will still form a zigzag at that level. But if it gets here also, it could be a running flat, and this leg will now be like an 100 to the upside. If it's a zigzag, it could be an 100 or 123 to the downside, to the upside also. But again, we are looking at a situation whereby this leg that we're talking about can actually run from here to here, can actually run, if it breaks the top, where are the levels? It can run, because this is like 90, like I said. This is like 90. It is still within a zigzag zone, because this is 76, this is 85. It's still within a zigzag zone. So at 90, it will still be a regular flat to the upside. Now, levels that we are thinking, if I may use purple here, levels that it could be, again, could be at 123. So if we get a price action, and if this thing continues to go down and we get a price action here, it could still be a B. In that case, at that level, it's still going to be, it could still be a walk as instead of a regular flat, as a running flat. It could still work as a running flat, whereby this one goes down, but the option of the running flat might even not still work out. But we'll look at that, because it could be a running flat, this one coming down, and a running flat could just, stall at about 61.8 to the upside again, or do a 123 to the downside, or 100 to the downside. Another thing it could be again, because B, so far B does not break. No, it will still be a correction. So far that the B does not break 161.8, this level here, then if it gets to 161.8, then it's going to be an extension, which is extended flat to the downside. So anything is still possible. These are gaps here that price would decide before we now say, oh, we are doing a wave 2. And once we break this limit here, that is when we say, okay, this is wave 1, and we are breaking the wave 2. But that is a whole lot. It's a whole lot. So you have to know that B wave that is coming, this wave that is coming, it's a whole lot. You have to be very careful with it to decode what is giving you. So it's piecemeal by piecemeal that will decode what is happening. So, but how do we get around it? How do we get around it? So if you understand how we get around it, now this is what it looks like. Now, so far, this is also moving up like this. Is it a price action? Would this one close like this? If it closes like this, we have to pay attention to the daily candles and how the daily candle is forming. Because here, it gives a recipe of a bullish move to the upside. Here, you know, this triad, 1, 2, and a 3 on the daily gives a recipe. And we have this going down. Now, if this one should close like this in a bullish format, then it will be interesting to see how the 2 daily candle is going to close. Probably they're going to break this structure here. You know, these are the structures we are interested in. Otherwise, price may still lose it. And if it corrects slowly to the upside, it's going to break below. If it breaks 90, then we are going to break the bottom again. If it does not break 90, it could actually stall here to do the B and still go up. Or around this, it could do your, you know, your zigzag from here and still go up. So anything is possible, but we need to begin to interpret what we are saying. So far, this is the daily, and this is what candle we are seeing now. This is the candle we are seeing now. This is a reaction and a rejection here, you know, to form this triad, and which we call a morning star. We call it a morning star. Here, we call it a morning star. So if the morning star is relevant, we're going to see the way this one is going to close. If it closes the daily 2 daily candle and breaking this structure, then it could now be that then we are now going proper to do the C that we've been talking about. And when the C forms, it can still be an ABC on the long run or a 1 and 2 situation, not until 161.8 to the downside is broken. Now, we are taking that piecemeal. Let's look at the 4-hourly. When you are trading now, you really have to be very careful. So looking at the 4-hourly, there are things you must also note here. In case, this is the 4-hourly, like in case we are going to still break to the downside, you know, and we are saying that we are seeing a wave 3 in the making. If it's wave 3 that we are seeing in the making, this one can be treated as a wave A to the downside of that correction, of a wave 2 of that move. Let me make you see it. Why we are saying this is that you see this move before. When we add this move, we thought this one would be an A, this one will be a B, and it will store around here to give us a C, and begin to go down to finish a big C. A C of a big B before we now turn down to do a C. But now that we had broken 123 here, and this is where we got to, well, technically we had broken that based on this correction that is giving us. So we think that we're going to turn to the downside. Now, in that case, with this new move, this one could be a 2, a 1 and a 2. Then we might be seeing a 3 of it unfolding, a 3-1. So in a 3-1, this will be an A and a B and a C. So we need to see what this one is going to do to us. Not until it's now beginning to take structure. We should treat it as if it's A, B, and a C. that is going to come more down. That is what we can just do because it's actually bearish. If you look at it, it's bearish. It's actually bearish now for now. It's actually bearish, though it's a correction or it's a one move, but it's actually bearish. It's actually bearish. And one of the things that could help you to know if a structure is broken, it's if you now connect this trend. Before price gets here to say it's going to break it, this trend resistance here, you know, it's going to take a while. It's going to take a while. But for now, this is what we are seeing now. I hope you are getting my point. I hope you are getting my point. So this is actually shallow. So it may have ended this call here. So we may still go down, break structure to say we're going to, this is A on the daily, A or a B on a daily. So this basically could still be a B of a B on the daily, but which has not really given us anything. So we need to pay attention to what we are seeing here, because otherwise this may actually now be a 1, a 1, a 2, then we are inside of a 3. So a 3-1, a 3-2, then inside of a 3-3 of that, we are now seeing an ABC correction. So that is what is still possible. Otherwise, we can, before we can say we are going up again, we need to break this structure, number one. We'll break this structure and it won't make any sense. We're going to break this structure again, and then we can say we are going up again. So now, how do we attend to this one? This is a correction now, and the move for now is bearish, but this is a correction. It's a bullish correction, and this is what gave us the morning star. And now, when this one is going up, you might call it a double bottom, which is a strong indication that price may go all the way to break the top. But then you don't quickly judge that, oh, you are seeing a double bottom, not until structure is taken. And that is how to interpret, oh, your double bottom, your double top, your double this and all, triple this and all of that, or head and shoulder. So you don't interpret them like that. You are looking at them in terms of structure and what you know and wave. So wave, structure, and all of that is what you take into consideration and see structure breaking to the upside before you can say, okay, this is what it's going to really do. But when you see this move, it strongly suggests that the momentum is to the upside, but not until structure is broken, because it can turn down. And so you're not a switch sayer to say this is what it's going to do. Now let's look at this. I'm talking too much now. I'm talking too much now. So let me take it to we want to deal with what we are seeing here to know the direction of the price and the limit of our interpretation and what we can do. We can only work within the limit of what the price is giving us. We can't do more than that. So looking at this, are we at the low? So we're going to see if we're at the low and the height of it. I think the low here is just a bit below. Yeah, I think, yeah, this is there now. This is there now. So the height is not just at the right place. So it's, yeah, tipped. Now this is there now. So now there's a gap here. So this also for here, it's almost not there. It's a bit down. Good. So it's down here. Now, in terms of this move, if we say this is A of that move and this is a B, what is this one B giving us in this kind of a move? Now, from the black here to this place, the XY had given us a reaction at a 90. So this reaction, we saw this one, and we saw this reaction at a 90. This reaction at a 90 in terms of the structure that we are seeing as ABC, reaction here gives us something that technically we'll say it's a regular flash show. So it's a regular flat show. So if it's going to be a regular, because this is 90, let me use the red now for it. That's a regular flat show that is giving us at that B. It is a small a small b, and we need to see where C is going to go. So if it's giving us a regular flat show, in a regular flat show, we should expect at least a 61.8 to the downside, to the upside now, or 100 or a 123, not more. And if it's more than a 123, then they have changed the momentum to the upside again. So which means that this big correction is finished and we're going to do a big C. So that's how to interpret it. For now, which are the limits? Our limits that we're going to work now with this interpretation, what we're going to work now. I'm going to just sorry, please. So we want to see what that extension is going to give us. The extension is going to give us, let's see what it's going to give us from here, from the origin of A to the end of A here, and to B, because it's at 90. So 90 can only be a regular flat and nothing more. So this correction in the middle, it's not, let me take this out because it might not really give us what we are thinking. So the correction in the middle that we are seeing in the immediate is that of a regular flat. So if it's that of a regular flat, where do we expect this to turn down again? In case you are buying, you are watching this area of 61.8 for a price action to the downside. If that happens, price will break the top. And if price breaks the top, then we are still saying, okay, this B, the potentially is not done. We are still going down. So if it breaks the top, then we are looking at, are we now going to do a 90 of the daily? Because this is a 90 of the 4 hour. Are we going to do a 90 of the daily? So I will still get there so that you understand what I'm talking about now. So this is the first place. The second place will be this. The second place will be this, that we expect the price to break, will be around here, which is 100. The next place that the price must not take will be at 123. If price should take 123 here to the upside, if price should take that, it means that potentially, it means that this B is ended and this may just be C. So it will change a whole lot of things now. It will change a whole lot of things. This one has no use again because that wave has ended its work there. So it is the wave that we are using to actually navigate our movement now. So, but this is the immediate place that we'll see the price. Once we see a turn down from here, a reaction down here, if we get a reaction down from here, then we are, of course, it will break the top as it's going. So it's expected to break this structure. But these are the levels of price action, this area, and this area. Once we go past this area, then the price is going to go further up. That is what we are saying now. But then, the first thing to watch for is this area. Now, in terms of the structure, how do we see structure and how do we see it break down, structure taken out? Now, how do we know? This one had given us a structure here, which is A in itself. of that structure, an A in itself, and it did, which is A in itself, this is 1, 2, and a 3, which is a C. And this one ran in 5 waves. So this one, in terms of correction, this one did its correction like this. And this one now did an A, which is like A, and a B, and a C, which ended here. This is 4, 4, and 5 here. And the last move to the downside, which ran also in 5 waves. It ran in 5 waves, 1 and 2, a 3 and a 4, and instead of a 3, then a 3 here, a 4, and a 5 here before we are turning up. So this had ended a complete structure. So looks so much like it has ended a complete structure, and we are seeing this move to the upside. Now, for this B, now, are we going to turn down here? Now, in terms of structure, this is the first structure that has been taken. So when this structure has been taken, you know that the price is making an ascent. And of course, it has taken another structure out here. This is another structure that you are going to see it taking. So if it breaks this structure, it still does not mean that the price is going up. We should know that one. But what kind of reaction are we going to get here also matters. If we get a 4-hour reaction here, then it might mean that price is going to go all the way to break the bottom again. But if this structure is pierced by a week, if it's pierced by a week, it may mean that we are going for that up. That's what I'm saying. It may mean we are going for that up. That's what I'm saying. And you may need to be to guide. Apart from trend line alone does not guide you. Trend line alone, it doesn't guide you. But you have to look inside of the structures. That is why trade fails. Because people who are giving you entry point and all of that, they're not looking at what wave is doing, what structure is doing in the middle. It's not a straight jacket of a thing that this is where it's going to go. Eventually, it will go there. It might go there. If you know this is a trend, it might go there. But what it's going to do in the middle, you can burn the whole of your account when you don't know what structure is doing. Because this may go all the way. Once it breaks here, and it's not giving us a price action at this level, we've had a price action here, another one here. So if it does not give us a price action at this level and breaks this level, then we are going all the way up. And the next place we're looking at is not even in between here. It is this place. That is the next place we're going to look at. So we're going to look at this place. Then once we get a reaction, what kind of a reaction? Then you count the internal wave also. Because in that case, it might just be a wave C that is going up. We count the internal structure and begin to look for a divergence. The 1 hour divergence to see, okay, are we getting to the end of this wave, or is it going to go? And it might just give us, it continues to go up and give us a very impulsive wave, break all the structure to the upside. Once we break here to the upside, then we know we are going again to break the top. So if we should break there again, just know that we're going to break the top again. And which top are we going to break again? We're going to break this top again, and we're going to break this top again. That is the meaning of that. So, but it's still early. It's still early. It's still early. But if I were you, with what is happening, the news about the dollar and all of that, I will be much more concerned that let me see what is going to happen here first and begin to, shift my stop losses because it can get here and begin to turn down again. And if it's turning down again here and begins to take out structure as it's coming down, then it's going to break the bottom here. So with that said, we are going to use that. This is 90. So we're going to use that on that idea on the Euro USD. We're going to use that idea on the Euro USD. On the Euro USD. Same idea on the Euro USD. Let me quickly go to the monthly. So same idea on the Euro USD. So you know this structure very well. You have seen it over and over again. So we may be thinking that, oh, this is the beginning of a new trend. That is what I said when I dealt with DXY. It could be a beginning of a new trend because this one didn't go low, but it can still push low. The fact that it had recovered this much does not mean anything. So it can still push low, but because it's only when you are expecting it to form a zigzag that it will turn down almost immediately to form a zigzag and dip down a bit before going up and still do an ABC. So an ABC is still possible that will not break this top and turn more down, or that we're going to see a 1 and 2 situation. And when we see a 1 and 2 situation, we are going to now plot our probably channels to see if you're going to have a break to the upside out of that channel to say, okay, these are signaled the end of what we think is an ABC situation, but now is a 1, 2, then going to 3 situation, which is now going to break above and continue to break structure. This structure, all of them to the above. Wave 1 is always very you have to be very careful with wave 1. Likewise, a wave A, you have to be, because you don't know where it's going, and this is what is playing out. What we are seeing now. And when you learn this way, that you take structure, on a bigger cycle like this, and you begin to now interpret. Because for me, this one, if we fall to the downside of 5, yeah, it may have broken the bottom. Did it get to where we expect it to get to in terms of of course, one may stall between 1.25 extension to 1.6. Once it does not break 1.6, the fifth wave of this whole move, and which we didn't get really, but it broke more than. Let's see again. Let's see what it did from here to here. What it did break. Actually, it broke more than 1.25. So, and it's almost at 1.38. So it could be that the fifth wave has ended. It could be that the fifth wave has ended. Wave 5 has ended. Of course, technically, wave 5, once it didn't break this structure here. So this is the limit of wave 5, but this would have just meant that this is 4 and this is 5, and it has ended here. So we should have that at the back of our mind, that it's possible that it may have ended and we're at the beginning of a big ABC correction or a new trend. So let me quickly go weekly. That's just a recap. This is USD now, a recap. And we said this is 1 or A, and this one is not deep, and we are seeing a reaction here. So let's go to the daily, just like I said. The daily, if this one is a big A, and this is not too much of a B, because it didn't go too down, you understand? And like I said, on the daily, this could be, on the DXY, it's a morning star, but on the Euro USD, it could be an evening star. So this evening star, of what significance is it evening star? If it's strong enough, the move here would determine if it's strong enough, and if we are going to see this structure break this structure down. But you'll be over ambitious to think that this is going to come all the way down to break this structure to the downside. It is possible. And like I did tell you, using DXY, this is still within the purview of a zigzag to this structure here, which is an A, B, and a C zigzag before we turn up to now finish a B of this, a C of this leg to the upside, or a 1 and a 2. And if that C it's a wave 3, we will know, because it's going to break above 161.8. That is what we are saying. Now we need to see what is happening here now. So in the immediate, we're going to see this move as a 1 and a 2 and a 3-1, a 3-2, and we want to see a 3-3. So not until this structure gives way here, it could still be that, okay, we are coming down, really, So that is what we are saying here. So we need to see how the structure is forming. The next 2, 3, 4 days is very important. But if you are selling, the best is to begin to apply your stop losses as you are moving down, and don't take more than enough, you know, if you don't want to burn yourself. So we'll still see this as an A and a B, and this one as a C that is coming down. So that's what we said now. So if I bring out my drawing, if I bring out my drawing here within this space, and I want to change this one to, because it might be going down, let me just change that to a purple. And I think it would be better for us to look at the DXY in interpreting this one. So that's why I said on the DXY is reaction at 0.9, because using this one, it doesn't look like that. It's almost breaking the top here and it's turning down. So DXY is what you actually have to use, but we still have to take this as an A, a B, and that a C is coming down. Now we're going to see the extent of it as it's coming down. And that's nothing but the manipulation that you usually witness in structures like this. So on the 1 hour, is it giving us that? On the 1 hour, so let's look more on the 1 hour. On the 1 hour, this is from here to here. I don't need this one. I think I used that last week. On the 1 hour. So it's a bit up. Yeah, I think something there on the 1 hour. And if this is an A to the downside, and on the 1 hour, and we'll say this is a B. I'm going to take this one to the upside. So that is a B. Of course, you know, on the DXY, it gave us a 90, but here, what is it giving us? That retracement to the upside is more than a 90. So you can see it's more than a 90. So it's more than a 90. But again, you can say this is a double top. If I'm trying to apply both the DXY and the Euro USD, we may actually be going down to break the bottom, but I think we have to be very careful. We have to see this thing take out structure first. And what structure are we talking about now? We're going to take out structure first. This actually is a bit down. Okay, that's a bit down. So we're going to take out structure first. So what structure are we going to take out first? Just like we did from this origin of A to the end of A here to what we term as B. We are looking at these structures. The first place is this place. If I use this for it now, That is where we are looking at. We are looking at those places. The first is, this is 61.8. Then we are looking at an 100 here. And the last one, we are looking at 123. We are looking at 123, which is here. So once we break this level, that means we are going all the way down. But let's see how we take this one first. Then we watch for a reaction here also, and also at this level. But in terms of breaking structure, because these are things that we have to see very early, this was the first structure that was taken out. This was the first structure that the price took out. In case you are planning your entry, after this move to the downside, price went up to do a 4 and has finished this one. And price coming down, if you had counted this one correctly, this one is like a 1 and a 2 and a 3 and a 4 and a 5 to the upside, finishing that structure to the upside. And that this one is now coming down. You know, price first came down, you know, a 4 and a 5 of the 5. This is the fifth wave to the upside. The fifth wave to the upside did like, you know, up here to the upside. So, and this is the first wave, and it broke this structure. And after this structure is broken, the next structure that price is breaking and is contemplating breaking now is, it has broke the head of it. The head of it is broken. And so we are going to see how it's going to take out the support here. So how it's going to take out this support here, this one is gone now. This is the first intention that the price is at least temporarily is changing course. This structure is taken out and the price is coming down. So when the price gets to this point, of course, you can't say that it's going to, of course, I expect it to break this structure now here. But in terms of this move to the upside, this is where I expect a reaction. So the kind of reaction I get here will tell me if we're going to go all the way down or not. So that is what I've just said. And it will be a tough call to say that price is going to go all the way to this point, to this point, and to this point. So we look at structure on the daily, you know, on a whole to interpret what we are seeing, you know. And what I've said is that for structure to have even gotten to this place and do a shallow correction at first, in the first place. So if you go through the DXY and this one, you understand what we are trying to say. For all this to have happened, at what level is it, you know, taking place in the first place? It's of the whole move on the daily. This reaction occurred at a bit of more than 76, you know, almost at 78 or thereabout that is occurring here to the downside for this one, which is seen in the purview of a zigzag to the downside. So if it's going to take out this structure, once this structure is taken, if this one is taken and this particular one here is taken, then just know that that price is going to break down. So it's going to break down probably equal arm to this, the whole of the A, you know, to the downside. But then I think I will be thinking more of a movement to the upside. Not until this and this and this they are taken to the downside. That is when I will say, okay, we are going down. I think this structure will be key. The 100 extension here will be key first. So once we break this 100 extension here, then the momentum is telling me that we are going down. We are going down. But for now, let's see how we come. This is actually quite impulsive, and for now, on the daily, the kind of price action is such that the price may be, going down. But you need to be shifting your, if price has an intention that it's not going to come up again. So we need to be shifting our stop loss as it's coming down. So I wouldn't expect price to immediately jump up again at the opening of the market today. I wouldn't expect that. At least let's see reaction here, and see what we get here. The first thing we were expecting is that prices probably was going to come here. If this one is an A, probably we're going to, if this is an A, this price is going to come up here and move to the upside. That was what we were expecting, and we didn't get that. We may still get that, but this time around, I think we'll watch for what we are seeing. A whole lot is happening here now. So nothing is set in stone, but we look at structure. These are immediate structure to be broken. If price had made a turn here at 90, then you can say it's going to go down and give us an extended flat to the downside. But this still, if it breaks this structure to the downside, it's still in the purview of a zigzag. Zigzag or not, let's just take this 1 hour structure and 4 hour structure and interpret what is happening before we get to understand the whole structure. And on the daily time frame, like I said, the daily time frame, even if the price breaks the top here, it doesn't mean that it cannot still correct all the way to the downside and give us an extension, of A, B, breaking up and a C. But if now what price is going to give us is to still do this and go all the way down to break structure to the downside, we'll see. Crucial things. We need the first two candles here to close, and watch out for those levels of reaction, which is 1. This is the first one, and this is the second one. If you're looking at the daily now, and this is the third one, which is at 123. If that also is taken, so you are going to be looking at both the DXY as well as the Euro USD to interpret what is happening here. But these are kind of trades that you don't want to put too much of your money into it. The little one that you put into it, you are checking your stop loss and moving your stop loss, because you might just have a violent movement all of a sudden, and this may just cancel the whole move and they take it to the upside, even from here. But for now, we can say that this looks like an A and a B and a C, which may turn up here, for more upside or get here. But once this one is eroded and this one is eroded, then we are going down. So having said that, I wish you best of luck. If you have questions and queries, you can drop it to me on my channels.